All right. Good morning, everyone. Thank you so much for being here today. I hope that lawnmower isn't too loud in the back. My name is Megan, and I'm the coordinator of our CODEPINK's China's Not Our Enemy campaign. And our overall goal is to prevent an escalation of conflict with China while advocating for the reallocation of resources towards cooperation on pivotal issues like climate change. Recently, you've seen an escalation of trade war with China in efforts to, as the administration says, reinvigorate U.S. industries. And you can't separate the economic agenda of the U.S. foreign policy and security strategy of heightened militarism across the Asia Pacific because our economic and geopolitical motivations are what have sparked a majority of the arms buildup. The current administration has not only levied extreme tariffs against China, it has also called for a $1 trillion military budget, with a large proportion of the additional 150 billion going to U.S. forces in the Asia Pacific. They've also begun cracking down on Chinese nationals and Chinese Americans, especially in research institutions and universities, in order to prevent what they call knowledge theft to China. And these policies have historically led to discriminatory practices and workplace racism. So we're concerned about the trade war escalation with China, about the AAPI community on the front lines here in the US, and the ongoing military preparation for war on China. So I'm very excited to welcome our friend Ben Norton here today to talk about what's going on. Ben Norton is an investigative journalist and analyst and founder and editor of Geopolitical Economy Report. He lived in and reported from Latin America for several years and is now based in Beijing. Ben, welcome. Thank you so much for joining us today.
Thank you for having me. Can everyone hear me?
Yeah.
Great. So it's a pleasure being here. I'm going to go straight in. I made a presentation for today. I always think it's better to have something to look at, so it's not just talking head for an hour or however long. I also believe there will be Q&A after, so please feel free to ask some questions. My presentation title is pretty straightforward: Trump, tariffs, and trade war on China. Everyone can see what I'm sharing, right? Right?
Yes.
Okay. Okay. So we'll start. On Liberation Day, on the 2nd of April, Trump came out with this cartoonishly large cardboard board announcing that he was putting massive tariffs on countries all around the world. And soon after that happened, he actually singled out China. And this wasn't surprising because during his first term, Trump started a trade war on China in 2018. So he originally announced these so-called reciprocal tariffs on countries around the world. I think this was largely a distraction to make it seem like he wasn't singling out one country when in reality it was aimed at China. A quick note on this. Trump claimed that his tariffs were reciprocal in scare quotes. It's actually not true. It's objectively false. In reality, the formula used by the White House to determine the tariff rate was based on the trade deficit that the U.S. has with the given country. So the White House it's widely speculated that the White House used artificial intelligence for this because a lot of people ask different AI apps what they would do, and this is the formula that they gave. So it's very possible. But what they did is they took the exports that the exports that the country sent to the U.S., the net exports, so the trade surplus another country has, and divided it proportionally. So the larger of a surplus that a foreign country had, the more tariffs the U.S. would put on them. So it's not actually reciprocal, because in order for these tariffs to be reciprocal, they would have to be based on the tariff rate that another country charges the U.S., which is not what happened. So anyway, the point is, Trump put a pause on those tariffs. He put blanket 10% tariffs on all countries, and he hit China with 145% tariffs. Every few days, he increased it further and further. What this would essentially do, if these are implemented in the long term, would lead to an end to the vast majority of trade between the US and China. So Trump is forcing this economic decoupling. This is a term that's been popular in Washington for a few years now, the idea of decoupling from the Chinese economy. Trump has essentially turned the previous trade war on China into a nuclear trade war. Now, what are the goals of these tariffs? If you want to be very generous to Trump, and if you don't think it's just incompetence and stupidity, which could be a significant factor, if you want to be very charitable, this is my analysis. These are my words, not Trump's words. I think these are the kind of four main goals being floated around. Maybe they're not mutually exclusive. They could all be true, or maybe only one or two of them could be true. Okay. Trump says he wants to reduce the U.S. current account deficit, which is the trade deficit the U.S. has with the rest of the world. I'll point out that this is very contradictory because in order for the US dollar to remain the global reserve currency, the US by definition has to run a current account deficit because other countries need to get access to those dollars in order to use the dollar in global trade and to hold dollars in their reserves. So Trump also says that he wants to maintain the dollar as the global reserve currency, and he has threatened 100% tariffs on countries that de-dollarize, including on BRICS countries. He claimed that he killed BRICS by threatening tariffs. So, I mean, his policies are very contradictory. But okay, that's one of his goals. His other stated goal is he wants to reindustrialize the US. I'm very skeptical about this. I think it's not going to happen. I actually think these tariffs could lead to a further acceleration of deindustrialization. In fact, there's recent data that shows that capital expenditure in the US has been declining, that is fixed asset investment is declining because of all of this uncertainty surrounding tariffs. Trump says tariffs are going to force other companies from around the world to invest in the US. In reality, we've seen the opposite because there's so much uncertainty. Foreign companies and domestic companies are simply not investing. So and then also, I mean, if every single economy that has ever industrialized has followed an industrial policy in which the government incentivizes domestic manufacturing and invests in infrastructure and education and job training and provides support for targeted industries. Trump is not doing any of that. He's just implementing austerity and Reaganism 2.0, but also putting heavy tariffs on. So I don't think he's going to reindustrialize the US. I'm honestly not very convinced that he actually believes that. So of all these goals, I think number 2 is actually the least plausible. This brings us to number 3, that Trump is trying to force other countries to pay the United States tribute and to agree to this idea that's been referred to as a Mar-a-Lago Accord, which is based on the Reagan administration's Plaza Accord, which was implemented in 1985, in which the US dollar was very overvalued because, to simplify it, long story short, in the 70s, there was a lot of inflation. You had the head of the Federal Reserve, the Fed chair, Paul Volcker, who was a hardline right-wing neoliberal free market fundamentalist. He massively raised interest rates to crush purchasing power, to cause a recession. He crushed the purchasing power of US workers, which caused a significant decrease in inflation because no one had any money. There was a significant increase in unemployment, and that did bring down inflation, but it also significantly overvalued the US dollar. So the Reagan administration forced its allies, that is Western Europe, Japan. So in Western Europe, it was the UK, West Germany, France, and Japan, to devalue their currencies against the US dollar. And that was the Plaza Accord. Trump wants to do something similar, a Mar-a-Lago Accord, and he wants to reshape the financial system. I'll talk about this in a second. This has been proposed by Trump's chief economic advisor, Stephen Myron. And then number 4, I actually think number 3 is actually a very plausible goal. I think 1 and 2 are not plausible. The US current account deficit is not going to end unless the US dollar hegemony ends, which would be a good thing. But in the near future, I mean, it's going to happen in the medium to the long term, but it's not going to happen in Trump's term. He's not going to reindustrialize. 3 is plausible, at least for US allies and vassals. And then 4, I think, is actually the most plausible. And this is what Trump's, I think, probably his main goal is he wants to use tariffs to replace government revenue that's lost because he's massively going to cut taxes on the rich and on corporations. And Trump has said this openly. So if you look, this is an analysis that was done by economists recently looking at the April tariffs. And this is looking only at the tariffs announced on the 2nd, the widespread tariffs. And you can see that the biggest burden of the tariffs will fall on poor and working class Americans. So the poorer you are, the more the tariffs will hurt you by decreasing your disposable income. So if you look at the second decile, so it's not the poorest 10% of Americans, it's the 20th percentile, the range, that their disposable income will fall by 4%. In the third percentile, it'll fall by 3.5%. And then the richest Americans in the 10th percentile will see their disposable income fall by the least. So this is a regressive tax. This is why economists after Trump won the election, before he entered in January, before his inauguration, economists analyzed his economic proposal for his plans for looking what the impact would be in 2026. And they found that Trump is going to have massively regressive taxation. He's going to increase taxation on the poor and working class. The poorer you are, the more you will have to pay in taxes in the form of tariffs. And the richer you are, the less you will have to pay in taxes. So a reduction in taxes. And that's simply percentage. If you look at the actual nominal figure, you'll see that there will be a tax increase on the poorest 20% of Americans by about $800. Now, this was done before Trump's inauguration, so this is being very conservative in the estimates of his tariffs. This study should probably be updated, and in reality, the increase in taxation on poor and working class Americans would probably be significantly higher because the tariffs are even higher than Trump had originally floated during his campaign. So again, long story short is that tariffs are a regressive tax. They move the burden of taxation off of the rich onto the poor because in economics terms, there's something called the marginal propensity to consume, which means that if you get an increase in your income, what percentage of that increase in your income will go to increased consumption? Poor and working class people have a higher marginal propensity to consume because if you're only making $20,000 a year, the poorest Americans, and you get another $1,000, you're going to buy better food, better quality food. You're going to buy more clothes. You're going to consume more. So a larger percentage of that increase in your paycheck will go to consumer goods, and tariffs will cause those consumer goods to be more expensive. Whereas if you have $10 million in wealth, and then your paycheck goes up and you're already making $500,000 a year, and now you're making $520,000 a year, you're not really going to buy that much more food or clothes and such. Okay, so this gets really to this chart shows the kind of core idea that Trump has. He's like, look, before the progressive era in the US government revenue was almost entirely from tariffs. And of course, the US was also colonizing land, stealing it from indigenous peoples. This is still at a time when the US was expanding. But, the point is that Trump says, I want to go back to this era, especially going back to the pre-New Deal era. When, in the New Deal under FDR and up until the 1970s, the highest tax rate on the richest Americans was 90%. It was in the 90th percentile range. So Trump says we need to go back to the pre-New Deal era, or even the pre-progressive era, and cut taxes on the rich and corporations and massively increase taxes on the poor and working class through tariffs. A little plug here. If you go to my website, geopoliticaleconomy.com, you can see my friend, the economist Michael Hudson, published a really good article that summarizes the history of the use of tariffs and also the robber barons of the Gilded Age. And you can see that in many ways, Trump is trying to go back to that. Okay, I mentioned, if you look at the kind of 4 goals that have been floated for Trump's tariffs, number 3 was this idea of forcing countries to pay the US tribute and implementing a so-called Mar-a-Lago Accord. Now, this right here, this text is a speech that was given by Trump's chief economic advisor, Stephen Myron. And he gave a speech at the Hudson Institute, which is a neoconservative think tank in Washington that is funded by big corporations and billionaire oligarchs, including big Republican Party donors like Harlan Crow, Rupert Murdoch, the owner of News Corp, which owns all of these big right-wing media outlets like Fox News and the Washington Times. So in this speech at the Hudson Institute, by the way, when he was speaking at the Hudson Institute, next to him there was the logo, the symbol of the Hudson Institute, which has 4 flags: the US flag, the Israeli flag, the Ukrainian flag, and the Taiwanese flag. So you get an idea. This is a neoconservative, pro-war, vehemently anti-China think tank. Okay, so in this speech, what I'm going to read from here is an exact quote from Trump's top economic advisor. So this is just not my analysis. This is what he actually said. He articulated 5 goals of Trump's tariffs. He said, first, other countries can accept tariffs on their exports to the United States without retaliation, providing revenue to the US Treasury to finance public goods provision. Okay, that's 1. Second, other countries can open their markets and buy more from the United States. Third, other countries can boost defense spending and procurement from the US, buying more US-made goods, and in particular, US weapons from the military-industrial complex. 4, countries can invest in and install factories in the US. 5, I'm going to read this exact quote. Quote, they could simply write checks to the Treasury that help us finance global public goods, end quote. What does he mean by public goods? This is a term used by economists to refer to goods that are provided by the state that are needed for the rest of the economy. So for instance, when the government invests in a highway, that is a public good that has positive externalities for the rest of the economy. Private companies can use that. If you have universal healthcare, that can be a public good, so employers don't have to provide private healthcare. So what he says in this speech is that the US, he argues that the US provides 2 major global public goods, which are 1, what he calls the security umbrella, which is the global US empire of around 800 foreign military bases around the world. In this Orwellian way, he claims that the US is protecting other countries. In reality, of course, the US is imposing its hegemony on other countries and trying to maintain this global imperialist system. But he says, that's very expensive to maintain, so other countries should write checks to the Treasury or accept tariffs to help to finance this global empire, which, by the way, is economically illiterate. I mean, Stephen Myron has a PhD in economics from Harvard, which shows that you don't actually have to be very intelligent to go to Harvard, because he keeps insisting that other countries will pay the cost of US tariffs, which is objectively false. It's not true. It is US importers who pay the cost of tariffs. And much of the cost of those tariffs will fall on the shoulders of poor and working class Americans because the price of consumer goods will significantly increase. Now, Stephen Myron has this argument where I don't need to get into the weeds of it, but he claims that other countries pay for the tariffs in the form of the depreciation of their currencies against the US dollar. That maybe makes sense if you're talking about tariffs of 10%. So for instance, during Trump's tariffs in his first term, when he started the trade war in China in 2018, it is true that the Chinese currency, the renminbi, also known as the yuan, that the yuan did fall against the US dollar, which partially made up for the tariffs on China. However, 145% tariffs on China, the yuan cannot fall 145% against the US dollar. So by definition, the US will have to eat a significant part of those costs. His argument, Stephen Myron's argument, only makes sense if you're dealing with low-level tariffs. These very high tariffs, it's not true. The currencies of other countries will not fall, even if it's 40%. The currencies of other countries are not going to fall 40% against the US dollar. Moreover, another reason that this argument is absurd is because Trump wants to bring down the US dollar because he says he wants to have a weaker dollar to help reindustrialize, which will hurt the purchasing power of Americans because imports will become more expensive. But it will, on paper, it will increase the competitiveness of US exports because other countries can buy those US exports more cheaply if the dollar is cheaper compared to other countries' currencies. So the Trump administration, again, has a blatantly contradictory policy. It wants to have its cake and eat it too. It claims that it's going to force other countries to pay the cost of tariffs by raising the value of the dollar against other countries' currencies. But then Trump and Stephen Myron also claim that they want to bring down the value of the US dollar to reindustrialize. So once again, I don't think the US is going to reindustrialize. That's a false promise Trump made to the voters in the Rust Belt, in the swing states, especially places like Ohio, Michigan, Wisconsin. These are major swing states that have been deindustrialized in the neoliberal era. And Trump falsely claimed that he was going to bring back these good manufacturing jobs, which, by the way, were unionized. That was one of the reasons they were such good jobs, is they had very strong unions. And the reason that US capitalists sent those jobs overseas and closed the factories is not just because they could exploit lower paid labor abroad, but because they could break the back of unions. So again, Trump's policies are completely contradictory. But the point I'm getting at is that, Stephen Myron has this idea that other countries will pay the US for these so-called public goods. The first public good I talked about is the global empire of 804 military bases. The second so-called public good is the US dollar system. The global financial system with its heart in the US dollar, and in particular, US Treasury securities, that is US government debt, which replaced gold as the de facto asset that the global financial system is based on in 1971, when Richard Nixon took the dollar off of gold. I don't need to get into that. People can ask me about it later if you want. So what he's saying is that the US provides this system that other countries supposedly benefit from. In reality, it's the US that benefits from it. More specifically, it's Wall Street. Wall Street has benefited from this system over decades. This is why there's been a massive increase in wealth inequality in the US. That wealth inequality is a product of the massive inflation of the value of assets, of financial assets like stocks, like bonds, and real estate in the US. And the vast majority of those assets are owned by the rich, which is why there's been such an increase in wealth inequality, because if you don't own those assets and the value of those assets has been massively inflated, then you've, by definition, gotten much poorer in relation to the rich people who own everything. So these are the goals that the Trump administration has on paper, that they say, with these tariffs. Now, where does China fit into all of this? China is a very convenient scapegoat because the US has deindustrialized very significantly in recent decades in the neoliberal era, because as the US economy deindustrialized and all those manufacturing jobs went abroad, it was US capitalists who did that. It wasn't China who forced them to do that. At the same time, the US economy significantly financialized. And we saw that manufacturing as a share of US GDP fell from over 1/4 of US GDP in the 50s and 60s, and starting in the 70s, it declined precipitously, and now it's 10% of US GDP. At the same time, the finance, insurance, and real estate sector, the FIRE sector, its share of US GDP has massively increased from around 10% of US GDP in 1947 to now today it's over 20%, 21%. So there's been a big financialization and deindustrialization of the US economy, and the US and China has become the world's manufacturing superpower. I should jump here a little bit and go to this chart. So China today represents 35% of global gross production of manufactured goods. The US is 12%. So China is roughly 1/3. The US is roughly 1/3 of China's output. And China has moved up the value chain. It's no longer, just producing low value added goods like textiles and toys and toasters, right? Like when I was a kid in the 90s and the early 2000s, there were a lot of racist stereotypes about China. Everything in China was bad. It was all very bad. I mean, of course, there's an element of racism. There was a slight element of truth in it. I mean, there were some very cheap goods produced by China. And not only has China's quality massively increased, but also the kinds of goods that China is increasing are much more advanced. So today, China is a world leader in semiconductors. It's a world leader in electric vehicles, in solar panels, in cell phones, in computers. And the US has lost its monopoly in some of these key manufacturing sectors. So if you look at US trade with China, it's actually quite interesting because, yes, the US does export some things like semiconductors, which are known as integrated circuits, or chips, computer chips, which are in everything we use today. But the largest exports that the US sends to China are actually low value added goods, especially primary commodities like oil and natural gas. Also, soybeans. The single largest export the US sends to China is soybeans. Corn is another major export. Sorghum. The US exports some electronics, but they're not the majority of exports. If you look at China's exports to the US, the largest exports are one, cell phones, which is included broadly under broadcasting equipment, cell phones and phones, two, computers, and then three would be electric batteries, and then also office machine parts and such, and semiconductors are another major part of this. So around 1/3 of China's exports to the US in dollar sums, around 1/3 of those exports consist of electronics, which is ironically why Trump actually put exceptions on Chinese electronics, which once again shows that I don't think he's going to actually reindustrialize the US. I don't even think he believes that, because he put exemptions for Chinese cell phones, computers, and semiconductors and other electronics. And he says they're not subjected to 145% tariffs, but rather 20% tariffs. So if he really plans on reindustrializing the US, then what he's actually blocking from China are all of the other exports that you can see, which is knitted sweaters, textiles, which is metals, plastic products like Tupperware, furniture, toys for children, video game consoles. So is Trump's grand plan to reindustrialize the US bringing back factories to make t-shirts and sneakers and Tupperware and toys and Barbie dolls? I mean, obviously that's ridiculous. It's not going to ever come back to the US. So Trump is putting exemptions on the for tariffs on the most important high value added goods that he says he wants to reindustrialize. So it's not about reindustrializing. What this is really about is it's an economic war on China aimed at economic decoupling from China and rerouting all of these exports through other countries so the US can prepare for war on China. That's really what this is all about. So this has been a process that's happened for about 2 decades now. And a lot of this really goes back to the Obama administration, the first term, when Hillary Clinton was the Secretary of State. And the Obama administration announced the so-called pivot to Asia, which means preparing for war on China. They saw that China was growing economically very rapidly. I'm going to go forward a little bit. China was growing very rapidly. As of 2016, China overtook the United States as the world's largest economy when you measure its GDP at purchasing power parity, which accounts for the purchasing power of the Chinese currency. Because if you just convert everything to dollars, the US dollar is overvalued. It makes the US dollar, it makes the US economy seem so much larger than it actually is. So China has seen this massive economic growth. It's moved up the global value chain. It's competing with US big tech monopolies. We see that with DeepSeek, artificial intelligence. We see that with TikTok competing with Meta and Google, which owns YouTube. We see that with Chinese cars like BYD. The Chinese electric vehicle maker has overtaken Tesla as the world's largest producer and exporter of electric vehicles. So China was rising and rising and rising. And the Obama administration said, we need to move our resources out of West Asia, the Middle East, out of West Asia, and send those resources to East Asia, to the Asia Pacific region, to encircle China to prepare for war on China. And in order to do that, they have to decouple because their economies are so integrated. The US is so reliant on China that it needs to find new trading partners. So in the past 2 decades, China's trade with the US as a percentage of its overall trade has been falling. In gross terms, it has been increasing, but in percentage terms, it has been falling. So around 2005, so let me start by saying that in general, China's exposure to, I'm sorry, I'm going to go in different, this isn't all out of order, I'm sorry, but okay. So what this shows is that in 2018, as recently as 2018, when Trump started his first trade war in China, China's exports to the US made up 19.2% of its overall exports. So it was still very much exposed to the US. and there's been this gradual, very slow decoupling, very, very slow. But what has happened is that with the trade war, it has accelerated. And as of 2024, China's exports to the US now represent only 14.7% of total exports. And with Trump's new tariffs, you can expect that that's going to continue to fall. And instead, China has been diversifying its trade and trading more and more with the global south, with BRICS countries, and ASEAN, the Association of Southeast Asian Nations, has actually become the largest trade partner of China and the largest export destination. Now, it is true that some of those exports are going to Southeast Asia, and then they're adding value, and in Vietnam, they're adding parts to these goods, and then they're exporting them to the US. So they're kind of indirect exports from China to the US, but China doesn't care about that. All Chinese exporters care about is finding someone to sell them to or selling them domestically. And this has also been happening. China recognized that after it implemented its reform and opening up in 1978 and implemented an export-led industrialization model following some of the similar state-led industrialization policies of some of its neighbors like South Korea and even Japan and Singapore, China recognized that in the early 2000s, it was much too dependent on exports, and it needed to diversify its economy and increase domestic consumption. So China's exports peaked as a percentage of GDP around 2005, 2006. And since then, they've fallen. And actually, there's this idea that you hear from the Trump administration. People like the billionaire Treasury Secretary Scott Bessent and the billionaire Commerce Secretary Howard Lutnick, they constantly reiterate this claim that China is so dependent on exports to the US. The US has all this leverage over China because of these exports. But in reality, China's exports as a percentage of GDP have been falling for 2 decades. And although, yes, China does still export a lot, in nominal terms, when you look at, it's $1 trillion trade surplus, that's because China has the world's largest economy and 1.4 billion people. When you look at it in terms of percentage of GDP, it's 20% of China's GDP. That's still substantial, but it's actually significantly lower than the global average, which is 30% of GDP. So I mentioned that China has been diversifying its internal consumption as well. And what we've seen in China is a massive, massive, massive increase in wages and in income. And in the past 40 years, income in China, the average daily income has increased by 10 times. And, there's been a lot of discussion in the West, especially, neoliberal economists love to point to India, which is, India has a non-aligned foreign policy. It's not accurate entirely to say that it's a U.S. ally. India does what's in India's interests, but it has increasingly good relations with the U.S. And the U.S. increasingly sees India as a country where it wants to de-risk and move investments out of China into India. And they're also trying to use India to cause conflicts within BRICS and other global South-led organizations. And there's been a lot of discussion in the Western media about the economic miracle in India, about how India has had very high economic growth. Well, I mean, there has been some growth. I can talk about that later. I don't have time to talk about that, but it's been grossly exaggerated. And yes, it's noteworthy that average income, sorry, I said average earlier. I need to reiterate. I need to correct myself. Median income, not average income. Median income is better because average income can be distorted by the extremes, especially by very, very rich people. If they have increases in their income, it can actually change the overall average. Median is better to look at. Median income in India in the past 40 years has doubled. That's good. I mean, I'm happy about that. But in China, it's increased by 10 times. And we're supposed to believe that China's in crisis and people in China are all poor and starving, and India is this great economic power. Obviously, we know the political reasons for that. If there's this idea that's still very persistent, that supposedly China, all Chinese workers are all, as J.D. Vance, the U.S. vice president, says, they're all peasants, which is, again, this kind of racist idea about China, that all Chinese workers are poor and they don't have any money and they're starving. In reality, Chinese industrial wages, manufacturing wages, have not been low for 20 years. They're significantly higher than all neighboring countries in Southeast Asia, including in India, way, way higher. There's been a massive increase. And as a percentage of gross national income, disposable income of households in China is actually, it's quite good. It's at a similar level of Sweden, South Korea, and Denmark. It's not at quite the level of the US because there's so little investment in the US. The US is actually an outlier. There's too much consumption in the US. There should be more investment, which is why, it's become this bipartisan orthodoxy that the US should reindustrialize. I mean, I also think the US should reindustrialize, but I also think that the US is not going to reindustrialize unless it basically, the only way it would do it is through socialism, essentially, because private capitalists are simply not going to do it. It's not, manufacturing is not profitable enough. The return on investment is not nearly high enough compared to what they can get from, just speculating in the stock market or buying up existing companies and assets through private equity, which is why we've seen an explosion in private equity. Anyway, the point is that China, the idea that China's economy is totally dependent on exports to the US and that there's no domestic consumption, it's simply not true. The Trump administration believed this because they believe the propaganda, that's the anti-China propaganda that's been spread for years, which is why China has been withstanding these sky-high tariffs on it. And it's why the US has been making substantial concessions immediately. Why Trump's trade war was it basically failed just a few days after it was announced. And China also announced measures including restricting the export of rare earth elements, which are very important for modern technologies. And China also announced that it's going to restrict the import of Boeing civilian airliners, which is also significant because China has been doing industrial upgrading through a state-led industrial policy and has been trying to develop its own domestic civilian airliner company to challenge the duopoly of Boeing in the US and Airbus in Europe. So really what all of this gets to, and here I know this might be over some people's heads and talking a lot about economics and all this stuff and trade, but what we really are talking about is it's political. At the heart of all economics is politics. You cannot divorce economics from politics. And really what this is all about is an attempt by the United States to kneecap China economically, to prevent China from continuing to develop economically, and to prevent China from moving up the global value chain, the global division of labor, keeping the rich imperialist countries that colonize most of the world in North America, Western Europe, and Japan, keeping them at the top of the global division of labor and preventing China and by extension the rest of the global South from moving up that value chain. Because when the United States normalized relations with China in the 1970s and started trade with China, it was under the impression that China would always be at the bottom of the value chain, that China would produce toys and toasters and textiles for the US, and that the US would produce all of the high value added goods. And if you don't believe me, this was actually admitted openly by US Vice President J.D. Vance, an underling of the billionaire oligarch Peter Thiel from Silicon Valley. And Peter Thiel gave a speech and wrote an article in the Wall Street Journal saying that competition is for losers. That's an exact quote. And saying that monopolies are good, and saying that proudly admitting that Silicon Valley's business model is based on monopoly, and that the US wants to prevent global South nations from moving up in the division of labor so US corporations can have a monopoly, so they can continue to charge monopoly rents to around the world and extract these massive super profits through control of intellectual property rights. If you don't believe me, this is what J.D. Vance, this is incredible because this is not just me. This is what world systems theorists have been saying for decades. Revolutionaries, anti-imperialists, socialists. But here comes J.D. Vance, and he gave a speech at the so-called American Dynamism Summit, which was hosted by Andreessen Horowitz, a venture capital firm in Silicon Valley. And he said, quote, "The idea of globalization was that rich countries would move further up the value chain." Well, one second, I can't see this here because of the Zoom. The idea of globalization was that rich countries would move further up the value chain while the poor countries made the simpler things. You would open an iPhone box and it would say designed in Cupertino, California. Now, the implication, of course, is that it would be manufactured in Shenzhen, end quote. And of course, Shenzhen is a major manufacturing hub in China. And then he complained, J.D. Vance said, quote, now we assumed that other nations would always trail us in the value chain. But it turns out that as they got better at the low end of the value chain, they also started catching up on the higher end, end quote. So, I mean, what he's acknowledging is that world systems analysis was correct. Now, what is world systems analysis? I don't want to, confuse people. It's not that complicated. The idea, this goes back to the dependency theorists of the 1960s, largely in Latin America, especially coming out of Argentina and Brazil. You had these left-wing developmentalist economists, and they argued that the global capitalist system was designed in a way that prevented the formerly colonized countries of the global south from moving up in the international division of labor because their economies were trapped exporting low value added goods, raw materials, primary products, very cheap commodity, very cheap manufactured goods, like for instance, textiles, t-shirts, right? That are very labor intensive with very low profits. And they would export those to those countries that are largely in the global south are known as what's in the periphery of the world system. And then the rich, advanced capitalist countries, the imperialist countries that colonize most of the world, are in the core or the center of the world system. And they get super profits because they have monopoly control over high value added goods, largely advanced technologies. And they use their control of intellectual property, and they back coups and other policies to prevent the global south from moving up the value chain. Now, there have been some changes in recent decades, and a few countries have been able to move out of the periphery into the semi-periphery, where they have some industrial manufacturing capabilities, although they're not at the highest end of the kind of global division of labor. And by the way, what are those countries? They just so happen to be the BRICS countries: Brazil, Russia, India, China, South Africa. Iran has also joined. Mexico has expressed interest in joining, and Indonesia is now officially a member of BRICS as well. So essentially, I mean, J.D. Vance proved what I and many other people have been arguing for decades. Well, I mean, I haven't been doing it for decades. I've been saying this, but people older than I have been saying this for decades. He's essentially arguing, he's admitting that world systems analysis was correct, and that the goal of the United States is to prevent China from moving up the value chain and the global division of labor. And this is not just the Republicans. I mean, this is bipartisan. The new Cold War in China is bipartisan. In the Biden administration, a lot of people thought, well, these Democrats thought that when Biden came in, he would end the trade war that Trump started against China in 2018. In reality, Biden expanded the trade war. He imposed more tariffs on China, especially targeting China's advanced manufacturing. In particular, the Biden White House put 100%, 50 to 100% tariffs on Chinese electric vehicles, batteries, solar panels, and semiconductors and some other electronics. So exactly at the high end of the global value chain and the global division of labor. And Biden's Commerce Secretary, Gina Raimondo, who was replaced in the Trump administration by the billionaire oligarch from Wall Street, Howard Lutnick. Well, Gina Raimondo, back in the Biden administration, she admitted that the U.S. wants to, quote, slow down China's rate of innovation, end quote. She also said that the U.S. would, quote, do whatever it takes, end quote, to prevent China from getting access to the most advanced technologies. And we see this with the U.S. Trump has continued Biden's policies of putting more and more export restrictions on advanced chips, on semiconductors, to try to prevent China from getting access to those chips, because the U.S. thought that those chips would be necessary to train artificial intelligence models. Of course, the U.S. was proven wrong, because China, this Chinese company, DeepSeek, surprised the world by releasing this very advanced large language model that they made for free. It's amazing. Open source, which destroyed the business model of Silicon Valley, which is based on monopoly, and in particular of so-called OpenAI, which is actually closed AI. OpenAI is led by the billionaire oligarch Sam Altman, and OpenAI is 49% owned by Microsoft, one of the world's biggest monopolies. And their business model was investing hundreds of billions of dollars in research. They're building their own energy grid, privatized energy grid, to develop AI as soon as possible to have a monopoly so they can charge these monopoly rents to the rest of the world. Well, China broke that monopoly. So really, I mean, I talked about this earlier. What the US goal is to reimpose hegemony economically by kneecapping China, destroying China's advanced manufacturing capabilities, and ultimately, it's trying to reverse what we've seen in the past few decades, which is that before the peak of European colonialism in the early 19th century, China represented around 1/3 of global GDP. And that makes sense. China has been historically one of the world's largest countries in terms of population. It's now the second most populous, but it has 1.4 billion people today. It made sense that in the 1820s, before the century of humiliation, before the first Opium War in 1839 and the second Opium War in 1856 to 1860, and the partial colonization of China by Western powers, the British Empire colonized Hong Kong, the Japanese Empire colonized Taiwan, which, by the way, Taiwan has been part of China for longer than the US has existed as a country. And the Portuguese Empire colonized Macau. It was not until 1997 that Hong Kong was finally restored, that China's sovereignty over Hong Kong was finally restored. Hong Kong was a British colony until 1997. Macau was a Portuguese colony until 1999. So for China, this is about reversing the century of humiliation and returning China to where it was before the peak of European colonialism. And I would say the global South as a whole, because Western economies, they have this idea that they became so rich through their ingenuity. No, they became rich through colonialism, through genocide, through ethnic cleansing, through stealing land and resources. And then they did industrialize using the capital they got through the primitive accumulation based on genocide and slavery, chattel slavery. Millions of African people trafficked as slaves. That's how the US and Europe industrialized. And then they had monopolistic control over these technologies. And that's what it's all about today. They're still trying to maintain monopolistic control over these technologies. And they're trying to, in their words, the way they see it, put China in its place at the bottom of the global value chain. As J.D. Vance says, they want, the idea of globalization was that rich countries would stay at the top of the value chain of the global division of labor. And that's why, and of course, also the fact that China has a socialist system and is challenging US-led neoliberalism and showing the global South that there are alternatives to the neoliberal model that the US has imposed on countries through US domination of international financial institutions, international scare quotes, like the International Monetary Fund and the World Bank. China has proposed a systemic alternative and is developing the infrastructure needed through the Belt and Road Initiative, through BRICS, through the Asian Infrastructure Investment Bank, through the China Export-Import Bank. China is providing the actual capital, the infrastructure development, and the technology to actually develop and create an alternative economic paradigm. And this is why more than ever, last year, this is why more than ever we need an international economic order. And this is what I'm concluding with. And this recently, and a lot of the talks I've been giving, this is what I've concluded with, because 2024 was the 50th anniversary of the call for an international economic order back in 1974 by the global South, by the formerly colonized nations, and the Soviet Union and the Eastern Bloc had supported this call at the time in the 70s. And regularly at the United Nations General Assembly, there are constant votes. And for 50 years, the votes have looked exactly the same. It's the global North, the colonialist countries, against the global South. Or now, Russia has basically been integrated into the global South. It's been kicked out of the West, kicked out of the G8. So now they use the term the global majority. So, I mean, it's the colonizers against the formerly colonized. I mean, and it's not just this vote on the call for a new international economic order. There's so many similar votes at the UN where it's the global north versus the global majority, where it's the imperialist West, the collective West versus the global majority. And China, as the most powerful country representing that, with the biggest economy and the most advanced manufacturing capabilities, that's why China is seen as a threat. But of course, if the US succeeded in overthrowing the Chinese government and breaking up China and imposing on China what the US imposed on Russia in the 1990s with neoliberal shock therapy, mass privatization, the life expectancy of Russian men fell by 6 years in the 1990s. Millions of people in Russia in the 90s died preventable deaths. There was a massive increase in infant mortality and child malnutrition. That's what the US did to Russia in the 90s. They would love to do that to China. And then if another country followed China, they would do it to China they would do it to the successor as well. So it's not just about China. It's about maintaining an imperialism. And imperialism is fundamentally a global division of labor in which the imperialist countries are on top and they prevent workers all around the world from ascending the global division of labor, as J.D. Vance, the US Vice President, admitted. So on that note, I'm going to conclude, and I know we're going to go to a Q&A. But that's the way I see the new Cold War on China, not just the trade war. The trade war on China is part of a new Cold War. And it's not just about China. China is the most powerful global South country, but it's about fundamentally imperialism.
Wow, thank you so much, Ben. That was incredible. We do have a few questions that people have been putting in the comments. I can choose a couple. I'm not sure if you probably didn't have time to read.
Yeah, go for it.
So Jack asks, do you have any predictions for how potential middle power states like Japan will react to a long-term economic war between the US and China? I'm hoping this situation will result in a much closer relationship between China and current US allies, but I don't know what the decision calculus for ending an alliance is like from an economic perspective.
Yeah, I'll try to answer this as quickly as possible. We've seen some signs recently from Japan, from South Korea, and even from Europe that they are trying to diversify their trade relations and even potentially offering an olive branch to China. Now, I'm skeptical about the capacity of these countries to do so because politically they're really limited in what they can do. The US is still militarily occupying Japan and South Korea and Germany, and has been for 70 years. And in the case of Japan, Japan's largest trading partner is China. South Korea's largest trading partner is China. So it makes sense for them to oppose the US trade war. But if the rubber hit the road and the US really put significant pressure on those countries and threatened secondary sanctions or tariffs or something, I think they would probably give in, even though the national bourgeoisie, the domestic capitalist class in Japan and South Korea, a lot of them want to increase their trade with China because China is their largest trading partner. So at the end of the day, the US is not the economic power that it was after World War II. When after World War II, the US was the only major industrial power in the world because all the other major industrial powers were physically destroyed. The US was largely left untouched. Peter Kutznick, the great historian, has pointed out that if you look at the physical destruction of just the Soviet Union in World War II, because, the vast majority of the fighting against Nazi Germany was on the Eastern Front. 3/4 of Nazi casualties in World War II were on the Eastern Front against the Soviet Union. And as Peter Kutznick points out, if you look at the physical destruction in the Soviet Union, it would be like taking a map of the US, drawing a vertical line from Chicago down and destroying everything east of it. Everything. So the US, one of the main reasons the US was so powerful is simply because every other major industrial power was destroyed. Obviously, Europe was destroyed, Japan was destroyed. So in the 40s and 50s, the US, when it built this international financial system with the dollar at the center benefiting the US, it had the power to do so. The US is much weaker today than it was then, but the US military is very powerful. So the US could back a coup. There was in these countries and install obedient client regimes. We saw a military coup attempt in South Korea, with martial law being imposed by the former right-wing leader. So, it's a very real possibility. Let's not forget that during the first Cold War, this idea that, South Korea and Japan and, Taiwan province and all well, Taiwan is part of China according to international law, but, South Korea and Japan, the idea that they were these great, lovable democracies, it's false. For the vast majority of their modern history and for most of the first Cold War, they were military dictatorships. Japan has been a one-party state almost without exception since 1955. It's called the 1955 system. South Korea was a military dictatorship until the late 1980s. Taiwan was a military dictatorship until the late 1980s as well. And there's a very real possibility that the US could back coups to put military regimes back in power, like we almost saw happen in South Korea. As for Europe, the Trump administration says that it's no longer focusing on Europe and instead is moving its priority to East Asia. I'm still skeptical about that as well. I'm skeptical about the leadership in Europe, the political class. So many of them are not only ideologically Atlanticists, but they themselves are deeply invested in the US stock market, in US assets. It's in their economic interest to keep those deep economic relations. So on the margins, I do think that they will try to, play both sides and have okay relations with China, but I do not expect them to significantly improve their relations with China. What I do expect is a lot of, the question used the term middle power. A lot of countries that are kind of playing both sides, that are kind of non-aligned, like the Gulf monarchies, Saudi Arabia, the UAE, India, Turkey, those kinds of countries, Vietnam. Vietnam is already significantly improving its relations with China. Indonesia, a lot of those, Malaysia, Singapore, they're definitely going to lean more toward China while still having good relations with the US. But, for these US occupied countries, the material conditions don't exist for a significant change.
Thank you. Ken Yi, do you have a question you'd like to ask?
Yes, hi, Ben. I enjoy your talk today, and I watch you quite a bit on YouTube. And myself, I've been to China 5 times, and I've seen, first time was back in 1978. So I've seen the advancement of China. So my question, I have a couple of questions, but I'll just stick to this first one, which is globalization. Do you think globalization is inherently a force that will create more equality for countries in the world, meaning that globalization would help developing countries advance up the value chain? And so despite what J.D. Vance said about globalization should just keep the advanced countries in the high value sector and keep the less developed countries in the lower value chain sector, that the opposite is true. Inherently, globalization will inevitably help to make the world more equitable and more equitable in the long run.
The simple answer is no, definitely not. But it also depends on what you mean by globalization. And this is an important context that is often not known. I mean, you've spent some time in China, so you might know. In China, when the term globalization is used, it's very popular, 全球化. It is very different. I would say it's kind of the opposite of what globalization is meant by in the West. Globalization in the West is typically used in a very neoliberal way. They mean liberalization of the financial sector, free movement of capital, maybe free movement of people, maybe not free movement of people. They mean reducing trade barriers, privatizing state-owned enterprises, ending subsidies for state. No, I mean, very, very different from what China means. China means that all countries can pursue their own independent paths of development, and they can trade and invest in other countries and work together, but it's not fundamentally based on this premise that it's capital über alles, right? Which is what the Western neoliberal conception of globalization. So, I mean, I like to point out that globalization has existed for centuries. The old Silk Road was a kind of early form of globalization. But typically in the West, when we talk about globalization, we mean neoliberal globalization that coincides with the rise of neoliberalism and the offshoring of manufacturing in the advanced capitalist countries. However, it's not true, actually. I'm not saying that you're saying this, but it's actually not true that neoliberal globalization led other countries to move up the value chain simply by the product of the system. I would argue that actually the countries that were able to move up the value chain did so in opposition to elements of globalization, because I mean this gets into a very long debate about comparative advantage. This goes back to the classical political economist David Ricardo, who was a lobbyist for the landlords and banks in the UK, and he was a member of parliament. But anyway, he had this idea that he's most known for of comparative advantage, which is going back to the classic example of Portugal and England. They should trade based on their comparative advantage. So even if Portugal has an absolute advantage, even if it can produce more wine and textiles than England, it should specialize in what it has a comparative advantage in and only produce wine because it can produce it more efficiently, and then export that wine to England and import textiles from England. And England, which has a comparative advantage in textiles, can export those textiles to Portugal and import the wine from Portugal. Okay, that's all fine and good. However, there are a lot of things that presumes. One, there's no movement of capital. There's no movement of labor. But two, it also presumes that wine and textiles are just as important for your economy. But now we see that if you take the logical extension of comparative advantage to an entire economy, this brings up the famous quote that you hear from neoliberal economists. It doesn't matter if you produce a potato chip or a computer chip. Well, you have to follow your comparative advantage. Well, if you only follow your comparative advantage, countries in the global south are only going to produce computer chips, and they're never going to produce, sorry, let me take it. They're only going to produce potato chips, and they're never going to produce computer chips. So this is the whole idea that countries have to defy their comparative advantage through state intervention in the economy, through industrial policy. And this is exactly what China has done. You know, 1/3 of Chinese GDP still comes from state-owned enterprises. There's this idea that with the reform and opening up that China just privatized everything. It's not true at all. The biggest companies in China are massive state-owned companies. They make up the vast majority of the Chinese companies in the Fortune 500, which is the 500 largest companies in the world. China's financial sector is state-owned. Its land is state-owned. Its telecommunications and transportation and energy grid are state-owned. All the commanding heights are state-owned. So China used the government to, they still do planning. I mean, they're not entirely planned like in the Mao era. They have market forces. It's a socialist market economy, as they call it. Right. But they have strategic planning in sectors that are very important, like semiconductors, like electric vehicles. You can go online and look up the summary of the Chinese state plan for developing what they call new energy vehicles, which is their term for electric vehicles. So the idea that China simply moved up the value chain because of the forces of neoliberal globalization and capital moving offshore to where they could exploit lower paid labor, that's actually not true. And if you look at the vast majority of countries in the global south, the vast majority of them actually have lost manufacturing potential. Latin America is a great example. In the 60s, Latin America, South America specifically, was the region of the world that had the highest proportion of manufacturing as a percentage of GDP. It peaked in the late 60s around 30% of GDP, the highest in the entire world. This was the peak of the era of import substitution industrialization with these state-led models of like Perón in Argentina. In Brazil, you had a similar model. You also had some like left-wing governments in different regions that were implementing state-led industrialization. And then in the neoliberal era with the third world debt crisis in the 80s, the IMF and the World Bank imposed structural adjustment and mass privatizations on them. And what you've seen is a massive collapse in manufacturing capabilities in Latin America. You know, I had dinner with the El Salvadorian ambassador to China, a very interesting guy, a former guerrilla, socialist guerrilla. He's now representing the left-wing Libre Party government of Xiomara Castro in Honduras. I'm sorry, I said El Salvador, not the El Salvadorian. The El Salvador government is very right-wing. Right. He lived a lot of his life in El Salvador. But he's the Honduran ambassador. He pointed out that when he was working in El Salvador, he's Honduran. It's complicated. He's the Honduran ambassador, but he was a professor and a scientist in El Salvador. He pointed out that when he was a professor and a scientist in El Salvador in the 1980s, that they produced like all of their petri dishes and a lot of pharmaceuticals. They don't produce any of that today. So, I mean, I can go on and on and on, but the point is that the reason that China and a few other countries were able to move up the value chain is precisely because they did international trade. They allowed foreign investment, but under very specific conditions, and the government targeted specific sectors to advance industrial production, which is known as industrial policy.
So if I can just clarify, if what I'm hearing from you is that globalization, the original meaning, as probably defined by J.D. Vance, is basically to keep the separation between the haves and the have-nots, in terms of the value chain, that it does not equalize economies. However, the redefinition of globalization, as witnessed in China, they basically turned the liberal, neoconservative concept of globalization. China turned it upside down, or turned it on its head, and redefined globalization so that it would benefit a developing country like China. So basically, there are two definitions of globalization. That's what I'm hearing from you.
Yeah, China uses their term globalization basically in a way that means kind of like international exchange. Economic exchange, political exchange, cultural exchange. China launched these three initiatives: the Global Defense Initiative, the Global Civilization Initiative, and the Global Development Initiative. That's what they mean by globalization. But they also make it very clear. They say in their Global Development Initiative, every country has a right to its own path of development, which means that if you want to, have protectionist policies and these kinds of things, go for it. But of course, what Trump's doing is not really just protectionism, it's trade war. There's a kind of difference between that, right? Like import substitution industrialization is one thing, but just launching a trade war to try to destroy China, which is what Trump's doing, is not import substitution industrialization.
Thank you.
Thank you, Ben. I think we have time for maybe one last question. I know it's getting late over there. Is that Kim?
Well, I know I said this earlier. I can respond really briefly if you want to take a few. I
Okay.
can try to keep it to 1 minute for each response.
Okay, Kim, over to you.
Okay, thank you, Ben. My question is, can you comment on Vance's recent visit to India and whether you think it's related to the provocation of war by India on this thing that happened in Kashmir? Thanks.
Yeah, everything that the Trump administration and the Biden administration before that, and their foreign policy, 90% of what they're doing is about China, trying to isolate China. Antony Blinken, Biden's Secretary of State, said that the U.S. this is a quote, the U.S. is trying to shape the strategic environment around China. That's a fancy way of saying containment policy, like in the first Cold War. In terms of Vance's trip to India, yeah, it's about improving relations with India, causing fractures within BRICS, trying to separate India from China. India is India. It's got its own non-aligned foreign policy. It's been like that since it co-founded the non-aligned movement. They've improved their relations with China, actually. They did so before the 2024 BRICS summit. So, India is complicated, but the U.S. is not going to get India to just join it against China. India is going to do what's in its own interest. In terms of other countries like the Philippines, I mean, the Philippines right now is governed by the son of the longtime dictator, Ferdinand Marcos. It's now Ferdinand Marcos Jr., Bongbong Marcos. He's continuing the policies of his father, just subordinating the Philippines to the U.S. The U.S. now has access to at least 9 military bases in the Philippines. That has installed the Typhoon missile system, which can hit most cities in the Chinese mainland. So, I mean, that's a really dangerous scenario. Also, Pete Hegseth, the defense secretary, who's a Christian extremist who called for overthrowing the Chinese government. He says the U.S. is in a holy war against China. He just took a trip to Japan and the Philippines, and he's also trying to deepen cooperation against China. So a lot of this is about China.
Marcella?
Yeah, sure. I just had a quick question about bond markets, and also just a little bit about China's strategy really quickly. This comes from my husband, so I'm just gonna read it off really quick. Specifically, okay, question about bond markets, specifically about the market for US Treasuries. I've been reading some stuff in the Financial Times about liquidity issues in the market for US Treasuries. China is a non-insubstantial holder of Treasury bonds, about 759 billion as of 2024. And I was wondering whether, in your opinion, exploiting this liquidity problem by flooding the market with their held bonds would be a possible pressure point or a countermeasure against US financial aggression. And if so, why haven't they used it yet?
Yeah, this has been discussed a lot, and it's absolutely a card that China could play. It's kind of like the nuclear option, right? If they're going for full on, if the US is going for full on decoupling, the Chinese mainland is still the second biggest foreign holder, the foreign political holder. There are private holders, but the second biggest foreign political holder of US Treasury securities after Japan. And actually, Japan has been selling a lot of treasuries recently, Japanese investors, partially because of liquidity issues, because of the collapse of the carry trade, because of the US dollars falling. Anyway, the point is that this is something they absolutely could play. And this is something that's really concerned the Trump administration. Scott Bessent, he's a hedge fund manager, a billionaire. By the way, his hedge fund has done very badly, but he also got to start working for George Soros, which is very funny because now, that's the, Republican bugbear, boogeyman. And now George Soros's right-hand man is the head of Trump's treasury. But Soros has constantly said they want to bring down the yields on 10-year US Treasury securities because the US federal debt to GDP is 120% and growing. It's a problem for them, and they really are concerned about the bond market getting out of control. So China could do that, and there were people who thought that China did that in April. It looks like it was now Japan, but that's one of the main reasons Trump blinked and put a big pause on his tariffs, because usually when you have a fall in the stock market, and there was a big fall in the S&P 500, usually that means that there's a rally in bonds and that yields on bonds would go down because bonds are seen as a flight to safety. They're seen as a safe haven asset. But in reality, when Trump announced all these tariffs and the stock market crashed, the bond market also crashed and yields went up very quickly, which is the opposite of what normally would happen. And that's because of capital flight. Foreign investors were simply selling all of their US assets and the US dollar was going down. So what this shows is that, again, there are so many moving parts here, and the Trump administration greatly overstated just how much leverage it has over China, and they also exaggerated how powerful the US economy is. And I would say that the US does have some things that it could use, like the US military, which is very powerful, but it is looking more and more like, as Mao famously said, a paper tiger.
Thank you.
Shlomo?
Yeah, you actually answered my question almost completely. But what if they do dump? What if Japan already said that they are not sure they can lend money to the United States? What happens if they say sorry, we are not giving you any money anymore? What will happen then? Thank you.
Well, to be fair, the bond market is enormous, and foreign central banks are not the most important holders of treasuries. What the US is really concerned about is foreign private institutions, private investors, and also domestic investors, because still US domestic investors are the plurality of the investors in US Treasury securities. So what would happen is if you see a lot of foreign investors sell US Treasuries and you see a big increase in US Treasury yields, almost certainly you would see some kind of yield control by the central bank, by the Federal Reserve. And we kind of saw hints of this, that the Federal Reserve, the US Fed has technically a dual mandate, which is unemployment, keeping unemployment low, and also inflation. And it has really, a lot of people since the 2008 financial crisis, they've been saying it kind of has a third unofficial mandate, which is keeping the bond market kind of stable. And there have been recent, volatility events, like last October, when the bond market kind of this is October of 2023, I believe, when the bond market when the 10-year yield went to almost 5%, which was like a huge issue. It scared a lot of people. And the Fed made some comments about, stepping in with some kind of liquidity facility. They always make these new acronyms of like just giving a bunch of money to institutions to buy these bonds to bring down the yields. So, I mean, what essentially would happen is the government would have to step in, and that would probably actually scare off foreign investors even more. And it would probably just lead to more inflation. At the end of the day, I mean, there are all these pressures leading to more inflation in the US. I mean, the US technically, it cannot go bankrupt on its debt because it's in dollars. The US can just print those dollars. But when it prints those dollars, which is effectively what it would be doing through yield control or quantitative easing, in which the Fed would just buy the bonds to bring down the yields like it did in the past 15 years, that would cause inflation. And especially at a moment like after the supply chain disruptions from coming out of the COVID pandemic, there's a lot of concern about consumer price inflation coming back. That's really the only reason Trump won the election, is that around the world, incumbent parties lost elections almost everywhere because voters blamed incumbent parties for the inflation, even though the inflation was global coming out of the pandemic, and voters blamed the Democrats, and Trump said he was going to stop inflation. Well, now his tariffs are going to supercharge inflation, and the bond market crisis could also cause more inflation issues.
Yeah, just quickly, who are the investors, the internal investors, besides the treasury? What? Sorry.
Yeah, so banks, pension funds, asset managers. I mean, the U.S. government could just force banks. If the Fed doesn't buy the bonds directly through quantitative easing, in which the Fed would basically print money, it would just add zeros on a computer screen and just buy the bonds to bring down yields. The Fed could, or the U.S. government could order banks to buy more and more bonds. They could, through regulation, they could increase like liquidity ratios and all this stuff and say that they could have some excuse, but they would say that the banks have to buy more and more bonds, and then they would probably end up eating. Like you would lose money buying these bonds, because if inflation is higher than the bond yield, if the bond yield's kept artificially low, you have a negative real yield. So the U.S. the government could force the banks to do that, but that would also scare off private investors. So, I mean, the U.S. has set up this financial house of cards. And I mean, I think it would be great if this is called financial repression, this idea of keeping interest rates artificially low, below inflation, so you can inflate away the debt. I think that's the only way out. I think that would be a good thing, as long as the burden is put on Wall Street. But because everything in the US is set up around private investors, and they always are the ones with the trump card, pun intended, I mean, there has to be discipline imposed on those oligarchs. There have to be capital control, so they can't just take all of their capital and put it in Bermuda and the Virgin Islands. So, I mean, the Trump administration is in this situation of its own doing, where they're trapped, because in order to actually solve this Gordian knot that they're trapped in, they have to implement some kind of policies that would be seen as socialism, like yield control, financial repression, and capital controls, which they're not going to do. So at the end of the day, it's going to be private investors who always win, which is what happened when Trump blinked. It was private investors calling his bluff.
Thank you, Ben, and thank you, Shlomo, for the question. Is there any last questions? You can raise your hand and if you have any next questions. But if not, then I just want to thank you, Ben, so much for coming here and answering all our questions and taking the time. I think I speak for everyone when I say we really love all the work that you're doing, and we really appreciate you. So thank you.
Thank you so much.
Yeah, thank you to everyone for watching and listening. It was a real pleasure.
Thank you.
Was amazing. Thank you. You know what, Ed, I got a question. What about how can we ever reorganize towards progressive goals under this paradigm when we're throwing the energy balance off entirely on the planet?
Yeah, well, I mean, we could do another seminar about that, but just to give a brief answer, I mean, there needs to be revolutionary systemic change fundamentally. I mean, the system is not sustainable. And if the US wants to reindustrialize, it would take state control over the financial sector, state control over Wall Street, disciplining of the oligarchs in the US. I mean, taxing away a huge part of their wealth, state control over massive swaths of the economy. Not only is that what's needed, but it's also what's needed to save the climate from climate change, to save the world from climate change. I mean, China is leading the world in the renewable energy transition. China has installed more solar power capacity than the rest of the world combined. And every year, China, I mean, it's amazing. China's peak carbon emissions have already been reached. They're going to be falling from here. And the US, we have Trump saying drill, baby, drill. So, I mean, I think we can learn a lot from China and from other countries. I mean, we need a fundamental shift, a system change. That's the only way to stop climate change at the end of the day.
Amazing. So
But yeah, I think I'm going to go because it's almost midnight here. So thanks for having me.
Thanks again.
yeah.
Yeah, bye to everyone.
Very grateful.
Thank you.